Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So we hit new all-time highs again, up 1% for the week. Looking like, these ones are kind of tough. Okay, let me go out here to the quarterly. Okay, so quarterly RSI. So remember, anything above 70 is pretty much overbought. Quarterly RSI is 76. Monthly RSI is 75. Weekly RSI is 68. And daily RSI is 69. So I got to believe we're going to have some kind of correction, maybe down here to like the 20 moving average, which right now is sitting at 5,991. But we'll see. The dollar is up 0.2% for the week. Kind of drew this loosely drawn, maybe pennant right here. We might have a little pop on Monday or Tuesday, but I would expect it to trade generally down until it breaks out of this, and then it might go up. I'm really starting to question my thesis that the dollar would get weaker and go down here to 90, and the Fed is cutting rates. They're going to be making the dollar weaker, but this is the DXY, the dollar compared to a basket of other currencies. And those currencies are losing value faster than the dollar. So I'm going to go to our friend here, Wikipedia. We can see this is the basket that the DXY is compared to, and these are the percentages of the currencies that make up that weight. So we got the euro, Japanese yen, the Great British Pound, Canadian dollar, Swedish krona, and Swiss franc. And these are the percentages in relation to that, most of it being the euro. So if these currencies are losing value faster than the dollar, then the dollar is going to be moving up. In addition to that, here, our friends at the CME Group, they say that there is an 86% chance that the Fed is going to cut 25 basis points here by the time you guys see this, will be 10 days. So not this next week, but the week after. So that would make the dollar a little bit weaker. But again, if the other currencies are losing more value faster, then doesn't really matter. Okay, moving on. 10-year yield minus the 2-year yield shot up a little bit, but still touching that zero line. Wouldn't surprise me if it came back down kind of like it did in the late 80s. And the 1-month treasuries. So for the first time since May of 2023, we are below 4.5%. So it lost 3.9% last week, should continue to go down. So this is basically just right when we saw that when the CME tool finally said, okay, they're going to be dropping 25 basis points, boom, fell down. And intermediate government bonds still flat. I don't think I'm going to be trading many bonds anymore. I just feel dumb every time I look at this chart, but did kind of have a little bit of a bottom here and punched up above the 200 moving average. I think there's a lot easier ways to make money than this. And I remember learning this lesson in poker, and maybe I need to learn it on bonds here, is that just play with worse players and you'll make money. There's no need for me to be betting with some of the smartest people in the room. This isn't really as bad as it looks. From the high point here, I'm only down 2.5%, but still, anyhow. All right, gold is down 0.8% for the week. Bias for this week is going to be sideways, possibly up. Okay, so let me zoom in here. You guys can see this red right here is the 20 moving average. Looks like it's just kind of bouncing right in between the 20 and the 50. I would love to see gold just kind of grind down a little bit and just kind of take a little more time before we're off to the next one. I want to see the RSI and everything get really sold off in multiple time frames. Because see, if we go to the weekly here, RSI is still pretty overbought. It's up at 58. Up in the monthly here, it's at 74. I'd really like to see some kind of correction, and I think we'll get that with the coming recession. And gold divided by the S&P 500. S&P slightly outperformed, not by much, but it did. Still looking good on this upward channel trend line right here. So I think once we get up about to the 50% ratio, gold should do quite well. CEF, physical gold and silver, down 0.5% for the week. I don't see any entries here. Technicals are middle of the road, but for new people to the show, these yellow lines right here are where I would make an entry if I had no position in this. And then the green is kind of the stink bid line, right? Like if it's probably not going to get down there, but if it does, it's a pretty good deal, right? But we've been in this for a while, so I have no interest in buying more. But if I was looking for a starter position, that yellow line would be it, and then the green line would be the, kind of, I don't want to say back up the truck, but it would be, you want to buy more. And PHYS down 1%. So, this is just physical gold, not physical gold and silver like CEF, just physical gold, same kind of thing. 1950 is your first entry there. 1875 is your bigger entry. I don't really see any patterns here, maybe a little bit of a pennant, but I would look at it as it's, if gold is going to go just trading in between these two right here, then most of these stocks are probably going to be doing the same. You look at the commodity itself first and then down through the ranks. GDX down 2.2. I'd be waiting for another hit right here of this rising 200-day moving average. We got decreasing volume indicating it's probably going to get down and touch there. And GDXJ down 0.8% for the week. So kind of odd that the junior gold miners are down less than the GDX. Maybe something happened to one of the majors in there. I can't quite remember. We'll see. I think anywhere, see like these trend lines here, kind of anywhere touches on that, but I would prefer a bet here along this upward channel, 200 moving average. And Franco, Nevada, down 1.6% for the week. Pretty fairly valued. I think anywhere around this 200 moving average is basically fairly valued. We had this moment back here where a lot of you picked it up for 115, 114. Good on you. And all that is just look at this, just waterfall sell-off. I love these. And then look at how low the RSI got down here. It got down to 24. That is just an insta bid with insta buy, lining up with all these back supports right here. Look at that quadruple bottom. Bam, got it. Wheat and precious metals down 1.6% for the week. I'd want to see this sell off just a little bit more, 58, maybe your first entry. That might line up really nice here with a rising 200-day moving average. And then a stink bid down here at 52.50. And EMX royalty, getting into some of the royalties here. So I think it's pretty fairly valued right now. I think it's a steal, actually. I don't own this company, but if I did, I would be making one entry now, and then my stink bid would be down here at 160, and that's just lining up with some back support back here. And Gold Royalty Corporation down 5.4% for the week. So love this company. They are going to be producing quite a bit of cash flow coming Q1 of 2025, and then even more as the year progresses. I almost pulled the trigger on Friday, and then I think this is just me being cheap, but I'm going to set a limit order for 118 to see if I can snag like a perfect triple bottom right here. And I think this is probably me just getting cute. A buy now is fantastic. And Origin royalties down 4.9% for the week. Great deal now. If you want a technical textbook one, I would get one right here on the rising 200-day moving average. But remember, this is a very small market cap company, so limit orders only, and just be patient. Let the price come to you. And Metalla royalties. So Sebastian was curious about this one. I do own this one, not a whole lot, but I'm not real stoked on it much anymore. Now that I can see straight looking backwards, I would have just sold up here at $4 and probably walked away. Since then, we've gotten more information from their last earnings, and they're basically spending as much money as they're making. So no real profits, and I think that's one of the reasons that this thing is sold off. So I'm going to be looking to exit my position on the next bounce. I'd rather not sell it when everything is just, our RSI right now is at 32. That's generally when you want to buy. I'd prefer to wait for a little bounce which inevitably will come. But if you want exposure, royalty exposure to gold and copper, this is a pretty unique one to do it. But they're not making any money, so I don't think it's one to get right now. And Empress Royalty is flat for the week. I reached out to them to do an interview. I haven't heard back yet. I'll give them a call as soon as I get off of this. But I have a stink bid in down here for 20 cents, and then I think anywhere around now is a good deal, around 24 or 25 cents. And Barrick Gold is down 4.1% for the week. So this looks almost like a picture-perfect double bottom here, lining up nicely with this green line that we drew a while ago. I think around now is pretty good. Decently low RSI. It's at 34. And kind of a neat little textbook double bottom that's lining up with a lot of back support. And Newmont is down 2% for the week. Okay, so we're below the 200 moving average. Looks very similar to Barrick's chart. So maybe starter position now. We got a little double bottom like that. I think there might be a little bit more selling pressure in Newmont just from some of the fundamentals. But as far as we've had just a nice waterfall sell-off. I got in a little early up here at 44. But still have a lot back here from when it was down to $30. That was pretty cool. I'd be making first entry around 41 and then another one maybe down here around 38. And Agnico Eagle is down 1% for the week. This one is kind of interesting. I think hopefully what's going to happen is we'll have a cup and handle here that will play out and not retrace more than 38%, which is where we put our first buy right here at 69. If we could see the future, this is what I would make it look like. If we get that, that'll be a 38% retracement, and then off to the races, and we shall see. I don't know. I'm guessing here, but that's ideally what I would like to see. So talking about gold, all this talk about gold is getting me excited. And you know why? Because we have a new boot camp coming up. Rick Rule is going to be putting on a clinic for gold, or a boot camp as he calls them. We have had a nice run in physical gold. The majors have had a nice double, just like we see here with Agnico Eagle since then. But they really haven't gone as far as they do historically when gold has had a move like it did. And the juniors certainly haven't shown the kind of love that they do in a bull run. And that's why the timing of this boot camp is so perfect. So longtime listeners will remember the uranium boot camp years ago and the pile of money we made on uranium stocks thanks to that 8-hour class by Rick. I believe that this is a similar story. And I think we're setting up for a big move here if you're in the right stocks. And for $99, you will be. Rick isn't doing this for the money. He's doing it because he loves to teach. He likes helping people make money just like I do. So I'm going to help him do it. The boot camp is January 11th from 8 a.m. to 4 p.m. Pacific time. It'll be 8 hours long. If you can't make that exact day, it'll be recorded and available to watch afterward as many times as you want. January 11th, Gold Boot Camp. Link is in the pinned comment below. I hope to see you there. Alrighty, B2 Gold. Robert says, is it a good time to buy B2? Well, when he asked me that, it was, I think, Sunday, and I said no. And then Monday comes around, and Tuesday and Friday, and we just have a nice drop. So had some pretty bad news come out with B2. I'm not going to go into all the details, but suffice it to say that I think over time, let's say we have a 1-year time frame on this. I don't even think we're going to remember this a year from now. This is a long-dated option that doesn't expire for me until January of 2026. So I'm actually thinking of taking another option out on this one if we get a little bit more selling pressure, and I think we will. So no, I don't think it's a bad time. I said it was here, but since then we've had a nice little sell-off. I think B2 Gold is pretty cheap, but I do think it will get cheaper. If you want to buy a technical entry, I would have a limit order here for $2.50. Actually, I would probably buy now, and then I would buy at $2.50, and then a stink bid down here at like 235. Okay, and that's just lining up right here and here, and then hopefully it hits a third time. Okay, hope that helps, Robert. And where are we? Equinox Gold is up 0.5% for the week. So I think we just want to be adding on this white up channel trend line right here. Maybe down here, if it touches this green one, it would be ideal if it came down and touched at right where those two cross. But right now, middle of the road technicals, I don't see any entries. And G Mining Ventures is up 1.4% for the week. So if you're new to this, I like this company a lot. Been in them quite a while. What was that? Over a year. And I think that, first entry right here around $7.20, and then a stink bid down here at $6. And Rio 2 down 4.3% for the week. So I like this one a lot because it really plays into Lobo Tigre's, pre-production sweet spot. If you guys haven't seen that, I'll put a link down. It's free report. It's down in the notes below, and it's labeled greatest discovery of Lobo's career. So check that one out. But anyways, we've just come into, these guys just got their financing for production, for construction. And basically his game is buy when they start to go into construction and then sell at first pour, right? That's essentially what I'm trying to sum up, like 20 pages here, and that's basically it. And I think this company fits pretty well into that. Now, I got a stink bid down in here for 38 cents, but I've been in this company for 3 years. And then you guys know the story, longtime listeners of the chinchillas and everything. And anyhow, but I think this one will do very, very well when they get into production and if Lobo Tigre's sweet spot plays out. And silver is up 1.5% for the week. Bias for next week is slightly down. We're asking Christopher Mullen, so check out our recent interview with Christopher Mullen. It was a couple days ago, and we talked about a head and shoulders pattern. So last week we were talking like, okay, is this the left shoulder, head, and then right shoulder? And he kind of confirmed that if it's angling down like this, if the neckline is angling down, then the head and shoulder pattern is kind of negated. So you want it basically to be flat or upward sloping, and then basically the opposite for an inverse head and shoulders. You want it to be downward sloping or flat. So I don't really think this is a head and shoulders pattern. I'm going to go with kind of a bear flag here, kind of loosely drawn. I think there's more downside for silver. I really do. I really hope that this $30 level holds, but I don't think it will. So, if you're new to silver and you want to start getting some positions, I think somewhere between the $28 and $30 level should be some of your first entry points. Okay, gold to silver ratio is now 84-1. So, what do you call it? Silver outperformed gold slightly last week. And PSLV, so this is physical gold on the stock market. And, first entry points here. I drew these lines to coincide pretty well with where $30 silver would be. So $10.16 and $9.50. And SIL up 5.7% for the week. So just a monstrous gain right here on SIL. I think that, starter position here at $35 and a stink bid down here at $31.50. SILJ down 0.6% for the week. So we got in here a week or two ago at $11.76. Basically, first line here at $11.50. Second line down here at like $10.25. But, kind of anywhere along this upward moving 200-day moving average. Do have some increasing volume for the week, so that's a good sign. And Pan American Silver is up 0.9% for the week. So this one looks a little bit more like a head and shoulder to me here. We've got, left shoulder, right. Whoops, where are we going? There we go. Right. Left shoulder, head, right shoulder, and see how it's kind of sloping up. Whereas when we go over here to this one, it's kind of sloping down. So I think this may be a little bit more likely, although if Mother Silver moves down, this one's going to go down too. Tough when the underlying commodity is, dictating. But on this one, it does show that Pan American Silver could move up. Middle of the road technicals. Fortuna Silver Mines. Okay, so upward channel. Got this upward moving 200-day moving average. Just kind of obeying that right now. I like a stink bid down here at $4.25. That one is down 1.3% for the week. I don't really see any buys right now because see the RSI 46, MACD, middle of the road here. We want to see that sell off just a little bit. And Silvercrest Metals up 2.2% for the week. So I sold out of this position after talking with Rick in the rural classroom. Been in this one for a couple of years now. I mean, our first entry there was when? January of 2022. So, been in this thing almost 3 years. We had more than double, so that was fantastic. Just because these ones that are down here was where we bought the most. And just fantastic run, but after being bought out by Core, we're exiting stage left. And it was a fantastic run and fun while it lasted, but Silvercrest is no more. And Endeavor Silver down 2.4% for the week. So remember, we drew these lines a while ago. So the first one is just about approaching here, maybe for a starter entry position at $4, and then like a stink bid down here at $3. But keep an eye on this 200 moving average that's rising right here. If it got down there and you get the RSI down in like the high 20s by the time it got there, that would be compelling. Alrighty, and copper, paging Dr. Copper is up 1.4% for the week. So for copper, I see this one, I'll call it down to sideways, okay? So there's got a bearish candle on Friday, so maybe a little bit downward pressure next week. We got what's called a death cross when we have the 50 moving average crossing below the 200-day moving average. So that would indicate bearish. And COP.U. Okay, so we took our first position in this. We talked about this last week. The one I pulled up last week, the ticker was SPHCF. And I'm part of 4 brokerage accounts, and every single one either wouldn't allow it or they would charge you $50 every time you bought. And that could really kill you if you forget to do the all or nothing purchase. But then I found the COP.U, and essentially you're buying it off the Toronto Stock Exchange, but you're paying in US dollars. So that's the one I went with, and there wasn't any fee. Well, let me rephrase that. They all charge you a fee, but it's not the blaring $50 one. You know, every time you purchase a stock, these things, they're not actually doing like free trades. If you read the fine print, they're clipping a couple of cents off of every share, or every purchase. They just call it, I'm doing air quotes, free, but they are charging you something, so let me not say free there. But anyways, the discount this week has gone up to 15% discount. So basically what we're doing with this one is we're buying physical copper that's sitting in a warehouse somewhere, and it should cost $4.19 per pound, but instead, if my math is correct, we're actually buying that copper at $3.56 per pound. So it's at a 15% discount. Now, it doesn't have to last, right? Okay, since this fund came into effect about 6 months ago, okay, so for a while it traded actually at a premium, right? This is the share price, and this is the net asset value. And then now the net asset value is up here, and this is the share price. So I don't know how much longer this is going to last, but I think right now, if the copper price stayed where it was, then I think this would be a good deal. Now, the caveat here is I don't think the copper price is going to stay where it is now. I think the copper price is going to go down because that's what happens every time during a recession. So we may be, buying a little prematurely here, but the thing is that's where the copper price is, and this essentially where the cursor is where we're buying. So, buyer beware. I'm getting some, and remember, limit orders only. There's very low volume on these things. I mean, look at that. Only 12,000 shares that day, 2.5 thousand shares that day. I mean, some of these days have almost no volume. 300 shares. I mean, that's $2,100. This fund is worth over 90 million, and almost no one is buying this thing. So I think we're at the very beginning stages of playing this physical copper trust. Pretty compelling, tough to ignore that 15% discount. Let me know what you guys think in the comments below on that one. All right, COPX down 1.5% for the week. So if you had your limit orders set here, I think it was $42. Yep, $42 for COPX. Got your first order in. Second order would be at 39. I will probably be a buyer here again at 39. And if it definitely gets down into this range where I was buying before, I will be buying even more. COPJ is down 1% for the week. So first limit order almost hit back here a couple weeks ago. Didn't quite get there at $21, and then second one at $19.50. I've got one in down here for $19.50. Do have a rising 200-day moving average, which is good, and so far the price action seems to be obeying that. And Freeport is down 4.8% for the week. So you just had your first limit order here set for $42, I believe it was, and it hit. So that's fantastic. Or maybe it didn't. Let's see. Low. What was the low there? Let me hover over it. No, it looks like you missed it by 3 cents. Okay. Well, hopefully it'll hit. I think it will. Maybe just up at a couple of cents and do a market order if you want to get in on that. Oh, and someone asked me about when to do market orders and when to do limit orders. I got this from Steve Penny over at Silver Chartist, is if there's around 400,000 shares traded a day, maybe 600,000 shares if you don't want to be too risky, or less than, then do limit orders. And if there's more than that, if you see a few million shares a day being traded, you're probably safe doing market orders. But I like to do limit orders personally, because then you can just kind of set it and then walk away, and it either hits or it doesn't. Arizona Metals is down 19% for the week. Is that right? Let me double check this. 19% for the week. Yeah. Okay. All right. So they must have gone through with the diluting. If anyone has any updates on that, let us know in the comments below. It had to happen at some point. Munduro Capital. I like this one a lot as a leverage play on copper. I think now is a good time to buy if you don't have any position. And then I also have a stink bid down in here for 9 cents. Super leverage play on copper. And uranium. The spot price of uranium is down 0.9% for the week. Bias for next week is going to be up. And term pricing right now, so contract pricing going out a ways, is kind of in the low $80 range. So the fact that this spot price is trading below that, I think that next week uranium is likely to go up. And on top of that, we got a nice little double bottom right here that I think will be obeyed. Uranium divided by gold, so still super cheap, and seems to be obeying this little trend line we drew. I really like, maybe in we've had a really nice run in gold, and if you haven't taken any profits in gold, I think now is a good time to take some of those profits in gold and swap it for U3O8 for the physical uranium here for SRUUF. So uranium divided by gold is flat for the week. Sprott Physical Uranium Trust is up 2.4% for the week. Still have 66.2 million pounds. It's sitting at a 1% discount right now, but I think that discount is probably going to get cheaper here real soon, especially if the spot price moves up and then this one doesn't move, because the term pricing is higher. All right. Oh, and a reminder, we've got Justin Hune, our resident uranium expert, coming on the show tomorrow. So be sure to get your questions in. There is a post under the community tab. And if you're really serious about your uranium portfolio, then check out Justin's website and follow him. There is a link down in the notes below. Cameco is up 2.7% for the week, hitting new all-time highs. Showed a bit of a bearish candle on Friday, so it's probably going to go down a little bit on Monday. No buys right now. Okay, high RSI, high MACD. I know some of you were on the call in the Row Classroom, and Rick basically gave this as his second pick if you're a retail investor for buying uranium. But I wouldn't buy this one now. I would. We were talking about it when it got down here around 35. That looked like a steal. Now it's getting kind of pricey. We want to see a little bit of a correction here, I think, before we make an entry into that. Because Kazatomprom is up 2.1% for the week. I got out of this because it's just a little too risky for me. Revolving door of management in this company made me nervous, and so I'm out. This may be one of those little points where Chris Vermeulen and Patrick Hakeem are really good at catching breakouts. Because see how much resistance. Just follow where the price action is. That little dotted line going back right here. How much resistance there is built up against that. Maybe if it breaks out right here, that would be a point where they would buy. I'm not very good at that. I'm a little better at kind of catching bottoms like this, Anyways, all right, URNM is up, down 0.5% for the week. I don't see any buys now. I want to be waiting for it to come back down here to this green upward trend line. Decreasing volume. 200 moving average is sloping down. That's looking kind of bearish. URNJ is down 2.6% for the week. So don't really see any buys right now in this. I don't see any discernible patterns. But, if you're new to the uranium trade, I think that any approaches towards this yellow line and then the green line would be the backup, the truck. URNM divided by uranium itself is, up 0.45%. So that means that URNM outperformed the metal slightly, and URNJ divided by Kazatomprom, Cameco, and the Sprott Physical Uranium Trust went down. So that means the juniors underperformed the majors and the metal itself. And UROI, Uranium Royalty Corporation. So we had some warrants expire at the end of the week, and so we can delete that now. That may have led to some of the selling pressure, and then boom, it re-rated. We also came out with our episode with Scott Melby, which I don't know, got a few thousand views. Maybe that had to do with this increasing volume. I don't know. The average volume here is probably 1 million shares or so, and then boom, one day it just had 7 million. So I don't know if that was us or maybe a combination of the warrants and us, anyways, had a big spike up there. I think I had the yellow line here drawn at $2.50, which I think is a pretty good deal. But now our new entry level line here is going to be $2 and we'll call it 30 cents. And then stink bid at 190. Some people watch the Qs, we watch the Us. Is down 7.8% for the week. So finally had a little bit of a correction. First entry down here at $5.50 and then stink bid down at $4.30. And UEC, Uranium Energy Corporation, is up 2.7% for the week. Still a great time to move past the point of concern. I mean, it's just been up here just fighting this resistance line around $8. What is that? $8.65, $8.70. Almost got up to $9 at one point. I mean, you guys got this down here at just north of 4. It's more than a double. Sell half, and then the rest is free. No buys right now. Super high. We want to see this correct down. And oil is, WTI is down 1.2% for the week. Brent is flat for the week. Bias for oil, so this one's tough because, see, look, where this green line is drawn right here, we got a lot of support on this one. However, like we were talking about with Chris Vermeulen last week, the more times it seems to hit this line, I feel like it just gets weaker and weaker. Let's compare and contrast that with a chart like this, like Endeavor Silver. I'm going to go out to the weekly here so we can see it. Now, look, over the last, like since 2008, 2015, 2020, and then here 2024, look, it hit 4 times. Like it's probably not going to go below that. But then we look over here at oil and look at how many times this thing has just gone boom, 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 boom. Same, in a very short period of time, it just keeps hitting that. I feel like it's breaking away at that resistance. And I got a real, I think we're going to go to at least $60 WTI pretty soon. So if we get another bounce up in some of the oil equities, I might trim my position just a little bit. But we'll see. We'll see. So bias for next week, it's kind of tough because it's sitting on a support line right there, but that is a pretty bearish looking bar. I'm going to say initially Monday, Tuesday, it probably goes down. And then after that, we'll see if it actually breaks that level. And Brent, even one interesting thing too here is that WTI seems to be moving down more than Brent. I don't know why it's kind of correlation is, I mean, it typically trades within $2 or $3 and now it's like 4. So I don't know if that means anything or not. And gold divided by oil is up 0.4% for the week. So that means that gold outperformed oil. Now takes 39.5 barrels of oil to buy 1 ounce of gold. XLE, our favorite oil ETF, falling out of the sky, down 4.7%. So darn near filled that gap right there. See this gap right back there? Looks like it's just about to get filled. Hit the 200 moving average and then move through it. Can still move a little bit, can still move down more. I think it will fill this gap. XOM. Okay, so you guys just got your first limit order in there at, let's see, what is that, $1.14. Next one I think is going to be down here at 109. We might hit it, especially if oil continues to get hit. But yeah, I've got my next limit order down in here at 101 just because I've been in this thing forever. And Chevron is down 4.1% for the week. Let's see. Last week we said this thing was way oversauced, which is technical jargon for overbought. And so far that played out to be right. So fell off a cliff here and that played out. We do have a golden cross right here though. So in the daily, see we got the yellow line moving above this purple. So this is the 50 moving average and that's the 200 moving average and crossing above it. So that could act as, like, I would actually run a trade on this if the RSI was lower. Like, let's say the RSI was down at like, low 30s or maybe the high 20s. I would run an option on this, looking at it out in the 30-minute and the 1 hour to see if we could get some kind of, see how there's like a little double bottom right there. I think that'd be a great place to run an option. But the fact that the RSI here is at 42, I don't like it. But maybe it will. Maybe that would be like a day trader's kind of thing to do. Pay attention to the market, going down to like the 5-minute time frame or something, and see if you can catch it. But as far as here on the daily, running like a swing trade, I wouldn't be comfortable with that. I'd want to see it sell off a little more. Occidental is down 6% for the week. So blew through our $50 support line right there. I looked back on history and the next kind of decent support I found was way down here at like 40, we'll call it $43. So I don't know, you guys, enough of you guys have Trading View here. Tell me what you think, but I didn't see a whole lot of support until then. Now we are getting pretty low in the RSI here. RSI is at 31, 32. So maybe we get a little bounce, but I don't see much to catch it. And Blackstone Minerals down 5.4% for the week. So pretty exciting. We got, whoops, what did I do there? Bring that back down. There we go. And boom. Okay. Got lining up with some back support right here. So if you don't have any Blackstone Minerals, the dividends on these things are pretty incredible. So every quarter they pay 37.5 cents, but look at the share price is only $14.75. So they're paying like a 10% dividend. Pretty pretty incredible that you can get that much out of this company. So I like this one a lot. I've had it for a while. They pay a great dividend, and it's in a sector that I don't think is going away. If you want to hear more about companies like this one, then join us in the Rule Classroom. Rick has turned us on to this one several years ago. And, this one here too, freehold royalties. I mean, look at this one. Like, if you just did the kindergarten method of just buying whenever these two like green lines, whenever it touched these two green lines, look, you get an 8% dividend there and an 8.3% dividend there. So the Rule Classroom is free with loads of content. Rick is doing another Q&A this coming Thursday, December 12th. So you can sign up for free and ask him Thursday anything you want. And after that, if you're a serious investor, then join us in the Rule Classroom Plus, where you get a much more personalized experience. We just had a Q&A with Rick last week. I promoted and posted the replay here on this channel, so you can check it out. I'll put a link up here, and you guys can check it out. You get a sneak peek into what the Rule Classroom Plus is like. That way you can kind of try it before you buy it. And the Rule Classroom Plus is $29 per month. And when you think about how much you're betting on these companies, that's essentially free. The price is going to go up soon, so lock in your price and you will be grandfathered in before it does. Links are in the pinned comment below. I will see you there. Natural gas is down 8.5% for the week. So it just kind of fell out of bed here, caught here by the 20-day moving average. Let's see, bias for this one, sideways to down, I would say, for next week. Now, Devon Energy, story of the week here. Okay, so this little like triangle pattern that we're talking about before, we said basically by the time we get out here to late part of December, we're going to know if this is going to break down to the downside or break out to the upside. And we got our answer last week. It broke down, so we can remove these now. And now we can start looking back here. Now, we asked Christopher Mullen about these little gaps back here, and he said, he doesn't really watch individual stocks, but he likes them a lot better for indices, like the S&P 500. He said those gaps almost always get filled. But when you take in individual companies like this, there's so much news flow and little things can completely re-rate the stock, like maybe they buy, a whole nother company, then, the gaps may not matter as much. But this chart is definitely breaking down. Low RSI got down to 27 on the daily. I made another purchase. I may actually be compounding this error. And I mean, obviously, I've never gotten it as cheap as I've gotten it now. So I am down on this one. But Rick likes it a lot. If we're right on our natural gas thesis, then American and USA and Canadian natural gas companies should do very well, and I think Devon is probably going to do the best out of all of them. So we'll see. I'll either continue to look like I have no idea what I'm doing, or in a year or two we'll look like we do. And Woodside Energy is down 5.7% for the week. So this little textbook double bottom didn't really pay out because see, it got down lower than that. So I tried to find some next support. Looks like it's going to be around, we'll call it $14. Let me know what you guys think in the comments below. I'm not so sure I'm hot on this one anymore. I don't know. I've been saying that for a while and just watching this thing go down. I just have so much more confidence in Devon than I do in Woodside. And Birchcliff Energy. Okay, so this one has a nice little double bottom ironing out right here. Fantastic dividend. They're down 6.3% for the week. So our limit order for $3.55 hit week before last and just came back down into it again. So I think an entry now is good. And Pado is down 4.4% for the week. Got our first limit order in here for, well, not our first one. We're already in this one, but for $10.65 and then $9.75. And I think it was Amp was asking me about this little gap right here. I wouldn't pay attention to that as much as I would this 50 moving average. I think that's much more likely to catch it than a little gap back here. And even more so than that would be this 200-day moving average. And I think what the small company here, limit orders only, I may actually move this limit order up to like 11 bucks or so. This 1065 may be a little cheap. And coal. Thermal coal is down 4.7% for the week, but lining up with a lot of back support right here. So my bias for thermal next week is up. Met coal still just trading sideways right here. I would guess that it's going to go sideways next week. Super scientific, up 0.1%, basically flat. And our coal ETF is down 5.1% for the week. So now, instead of 11.2 million assets under management, we've got 10.9 million, still the same amount of shares, 470,000 shares. If you're new to coal, I think this is your limit order right here, $22.25, and then a stink bid down here at 20. And Glencore is down 0.9% for the week. I really like buys on this $9.40 line. Lines up with some perfect back support. I mean, that was our first entry back here February, almost 2 years ago. And yeah, I think that's a really, really good buy point there. AMR down 8.6% for the week. Hopefully it just continues to tank. We might get our final and last limit order in here for 186. And BTU is down 6.2% for the week. Regretting selling our monthly option, put option here, because I think we could have made a lot more, but you know, I can also see the future now. I can see straight looking backwards. But RSI is getting pretty low, 31. So I don't see a whole lot of support where we are now. Next level of support I see is going to be down here around 22 or so, which is pretty close. So I'll be watching this. And I think I'm going to run another BTU secret money hack here soon. You know, I think the real buy point would probably be getting like a couple month option on it if it gets down here to 21, which is exactly what I'm hoping for. And TradingView, this software, I love it. How are you going to be able to run options like this without this software? And the answer is you're not. And I know a lot of you guys are using TradingView because you're using that link, so thank you for that. You can try this out for free. Try it out free first. You know, my brother's been using the software for years now, and he hasn't paid a dime. And now he doesn't have all these cool moving averages and indicators and stuff. You know, I mean, he can't do that. But, you know, still, you get to try it out for free. And I like it a lot. I love this thing. You know, if you're new to technical analysis, I think this is the cream of the crop software, and it's pretty affordable, you know. And so try it out. If you don't like it, it was free. Okay, platinum is down 2.1% for the week. Bias for next week is down, although I mean, we're right here at a pretty big line of support, so we'll see. But you know, if you have no platinum, I think that around now is good for a first entry, and then a stink bid around 900. And the way you buy that on the stock market here is PPLT, and your first order is now, and next stink bid would be down at 80 bucks. Palladium down 2.5% for the week. Bias for next week is down, although just hanging around this 200 moving average, but I think it'll probably go down. And first order would be around 900 bucks, kind of like platinum. PALL, the way you buy it on the stock market. So first one right here would be $85, and then down here at 80. And if you just want both of them in one fund, SPPP is where you go for that, one-stop shop. Your first limit order just hit on Thursday, and that was at $9.42. So we can get rid of this, and then your stink bid will be down here at $9. Platinum divided by gold, still historically cheap. I guess I need to move this down even more. You know, I was talking with Albert Liu about this and some, I think it was Christopher Mullen, that just because these ratios have gotten so extreme doesn't mean that they can't continue. So maybe I was dumb for trading some of my silver for platinum. Time will tell. Platinum divided by silver has now gotten into the 29, so it's below 30. I mean, just absolutely incredible how cheap this stuff is, especially when you look over at history. You know, there's moments in history, just in 2003, where it took 150 ounces of silver to buy 1 ounce of platinum, and now it takes 29. So nickel is up 0.8% for the week. Bias for next week would be slightly down, but you know, just hitting on quite a bit of support rate here, right around 15,500. And nickel miners ETF, NIKL, looking like we're coming into a buy rate here. So I'll probably be adding a little bit to my position if it gets down here to $11.50. Remember, limit orders only. And Centaurus Metals is down, 5.7% for the week. So I think, you know, stink bid's down here at 21 cents, and I'll put a first entry position just right around here on that 200 moving average. So basically now. And iron ore is down 1.1% for the week. BHP, one of our favorite miners, is down 2.4% for the week. I'm going to be checking options on this on Monday. We'll see. Last time I looked at this one and Rio Tinto, and they were both kind of expensive because everyone knew what was going to happen. It was going to go up, and it did. So that's why they were a little too rich for my blood. If you don't have any positions in BHP, I think now's a pretty decent time. Although caveat here, if we go into a pretty good recession, this one should get whacked. And Rio Tinto down 1.2% for the week. So if you want a position in Rio Tinto, I think around $60 is a pretty good deal. And our favorite pick ETF that just encapsulates a lot of the big ones that we want, BHP, Rio Tinto, Freeport, and Glencore make up the top percentage of it. First order right down there at $38 and around 50 cents, and then stink bid at $36.25. Although I don't see any orders right now, I would wait for it to come back down, which it probably will. Nutrien fertilizer is up 2.7% for the week. Like limit orders at $45. I mean, this one got within pennies right here. I think it got, what is that? $11 or $45.16, $45.15. So within pennies of it, you know, anywhere around there, I think is good. But RSI is middle of the road right now. We want to see it sell off. And Bitcoin, historic moment in Bitcoin. So we're now, we hit above 100,000 in Bitcoin. It's up 3.2% as of this moment from last week. So we've been talking about for a long time this massive cup and handle, and then we used to have the bull flag drawn in there, but it played out. So now we learned a new tool from Christopher Mullen. Now you've seen us do the Fibonacci retracement many times. This is the Fibonacci extension. So check this thing out. You go from the low to the high and then drag it back down to the low, and then you can basically see, like, where's this thing probably going to top out immediately, right? So the 61.8% retracement right there is at 86, that hit, and then the 100% retracement would be here at 108,000, which it will probably hit. Alrighty, well, I hope you guys got something out of that. Thank you for always being here. Love your comments. Leave comments down below, and I will see you over at the Rule Classroom and in the Gold Boot Camp. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.